Ever heard of Ship Healthcare? No, it's not a logistics company. It's a major player in Japan's medical infrastructure scene, and its stock is quietly sliding under the radar. At Insightful Value, we spotlight companies the market tends to overlook, and Ship Healthcare is a textbook case. But the question now is, why is this stock drifting downward? This review is for informational and educational purposes only. It is not financial advice. Ship Healthcare Holdings Inc. operates in a surprisingly diverse range of healthcare services. It's based in Japan and focuses on supporting the full spectrum of medical infrastructure, from hospital planning and medical equipment procurement to elderly care and pharmaceutical distribution. It's a one-stop provider for Japan's complex and aging healthcare system. From a value perspective, the business has historically been steady. It operates in a space that has long-term demographic tailwinds. Japan's aging population ensures consistent demand. Ship Healthcare's business model includes stable contracts with hospitals and medical institutions, recurring revenue streams, and government-backed healthcare funding, which typically makes for defensive, low-volatility plays. So why is the stock slipping? Part of it comes down to investor sentiment and valuation cooling off after strong past performance. In recent quarters, Ship Healthcare's earnings growth has decelerated, largely due to rising costs, inflationary pressures in medical supplies, and longer lead times for hospital construction projects. Investors may also be pricing in slower growth ahead, as the Japanese economy continues to grapple with structural challenges and tighter government budgets. Still, the company remains profitable and pays a modest dividend. Their most recent earnings report showed that while revenue was up slightly year over year, operating margins were pressured, and management issued more conservative guidance for the upcoming fiscal period. That's not a red flag, but for a stock that was priced for consistency and modest growth, it's enough to trigger a market pullback. From a valuation angle, this dip could present a buying opportunity. Ship Healthcare isn't exciting, but it's stable, and it trades at a reasonable multiple. If you're the kind of investor who looks for long-term reliability and exposure to the healthcare sector without the biotech volatility, this name might deserve a second look. At Insightful Value, we break down these types of businesses, quietly solid companies that most investors ignore. We translate the financial data, the strategy, and the risks into something that's actually useful. No fluff, just real analysis. Whether you're a beginner or a pro, our content is here to help you make smarter investing decisions. You can find more deep dives just like this one over at insightfulvalue.com. If Ship Healthcare caught your eye, or if you're just into smart, undervalued plays, make sure you subscribe to the channel and check out the site.